So, two national news outlets reacted to one of my previous videos calling the UK housing market Ponzi-like. One said I was right, the other said I was a sensationalist, and both of them quoted me line for line. So today we're going to settle this properly. Is UK housing really functioning like a Ponzi scheme, or is the truth even worse? And why is this debate exploding right now? So let's get into it. And of course, in case you're wondering why you should even listen to me, I'm Will Gale, the founder of the British Home Group, and my companies, British Home Buyers and British Home Sellers, are involved in thousands of property transactions each and every year across the UK. We currently have over 700 properties on the market right now. So I see firsthand the numbers every day. I see buyers who can't afford to buy. I see sellers who can't afford to sell. And I see a system that more and more people, including the media now, are starting to question. So let's talk about what happened after that last video. A few days after I uploaded, is UK housing a Ponzi scheme? Something unusual happened from my perspective. Two news outlets published articles about it. The Canary agreed. They said the UK market functions like a pyramid or Ponzi scheme, and repeated my exact arguments about prices detaching from wages, cheap money inflating the bubble, investors amplifying demand, wealth transfers propping things up in the process, and young buyers being crushed at the bottom. They even linked the arguments to Gary Stevenson's work on Gary Economics. Then a few days later, the Mortgage Introducer, an industry publication, disagreed. Now, to be clear, there are things they didn't disagree with. So they didn't disagree with the data, the wage price ratio data, the affordability crisis, the cheap money argument I made, the landlord dynamic argument I made. No, they disagreed with the language, the use of the word Ponzi. So the question becomes, are we arguing about the housing system or the word we use to describe it? I'll also point out that I made this point at the start of that last video, looking suspiciously like a Ponzi scheme. So look, it's important up front to point out that a Ponzi scheme is defined as a fraudulent scheme. The UK property market is considered legitimate, but nonetheless, it amazes me the parallels. So let's break this all down. Let's talk about what the supporting article, the Canary, got right. The Canary article made three crucial points, and all three matter. One, house prices rely on new entrants at increasingly high levels. They quoted me directly, the housing market only works if new buyers keep paying higher and higher prices. This is mathematically true. If the average price to income ratio rises from 3 times to 5 times to 8 times to 10 times, someone has to fund that jump every decade. That's not normal, that's exponential. The second thing is cheap money inflated the system beyond fundamentals. They linked to the exact chart I used. Interest rates slashed, borrowing capacity increasing as mortgage multiples on earning increases, asset prices inflated, wages stagnated, productivity flatlined. This is economics 101. If you increase people's borrowing capacity without increasing wages, house prices will rise relative. All it creates is more money chasing the same property, which boosts prices. Of course, the point the Mortgage Introducer makes is that the deeper problem is there isn't enough supply of property. And yes, I completely agree with that. But there are two sides to the equation that matter, not one. Supply, but also demand. The thing about demand is, yes, you can have more people chasing a limited supply, which boosts prices. But you can also have more money per person chasing a limited supply, which makes the situation even worse. It's a catalyst, and it is that point that is always overlooked. Finally, the third thing is wealth transfers are now a central fuel, not a bonus. The Canary pulled one of the most important lines from my video. Wealth is recycled upwards. Debt loads are rising. Inequality between those with property owning parents and those without is expanding. This is the part the industry never wants to discuss because it exposes the uncomfortable truth. Without the bank of mum and dad, the housing market would struggle a lot. It would stop working at the bottom of the market. That's when systems start looking Ponzi-like. Let's talk about what the critical article gets wrong. Mortgage Introducer's article does something fascinating, I think. They criticise the use of the word Ponzi and then proceed to agree with almost everything else. So let's break down where their argument goes wrong, in my view, and politely, there's nothing wrong with this publication. One, they treat supply as the only cause. They say that it is just a supply issue. No, it's part of the issue, but not the whole story. If it were just supply, prices wouldn't rise during recessions. Prices wouldn't rise when wages stagnate. Prices wouldn't rise when productivity falls. Prices wouldn't rise when renting becomes cheaper than buying. Prices wouldn't fall from between 07 to 2023 in real terms, despite low supply. You cannot explain a 40-year credit super cycle with, we don't build enough houses. Secondly, they ignore the role of cheap credits. They quote me on interest rates and then ignore the point. When lending rules let you borrow 6 times income, the limiting factor is no longer supply. The limiting factor is how much debt banks are willing to give you. That's what changed after 2008. Thirdly, they rely on brokers, not economists. The quotes in their article are from specialist lenders, brokers, mortgage finance companies. These are people whose income literally comes from more lending, higher borrowing power, higher transaction volume. So of course they're going to be defensive. It doesn't make them dishonest in any way. It just means they have a perspective shaped by their incentives. 4, they argue that current ratios are similar to the 2000s. Yes, the 2000s were also unsustainable. This argument doesn't strengthen their case. It really strengthens mine. 5, they treat not a Ponzi scheme legally as a rebuttal. Nothing in my video said housing was literally a Ponzi scheme, as I mentioned earlier. I said it functions like one because returns depend on new entrants entering the market. The base needs to keep expanding to fund everything up above it. The load is pushed downwards, wealth flows upwards. Late entrants subsidise early entrants, and when the base weakens, the system wobbles, and that's what we're all witnessing. That's a description of structure, not criminality. So let's talk about what the UK housing market really is, the truth between both articles. So let's put emotion aside here, the headlines and the criticism. Here's the reality. The UK housing market is not a literal Ponzi scheme, a literal pyramid scheme, a criminal enterprise, a scam. But it is a system that requires constant new entrants at increasingly higher price levels, a system fueled by cheap credit rather than productivity growth, a system held up by generational wealth transfers, a system that inflates assets faster than wages, a system that is worsening inequality, a system designed unintentionally to favour those who already own property, a system where early buyers benefit most, a system where latecomers shoulder the risk, a system that breaks down when debt capacity saturates. In other words, it's not a Ponzi scheme, but it shares Ponzi dynamics. That's the nuance the brokers missed, and that's why this debate matters. And it is becoming more and more relevant because of the new 2025 data. So here's what's changed. Since I released that video, firstly, the first-time buyer age has risen from 32 to nearly 34 in many regions. Secondly, the average deposit is now over £61,000, unaffordable without family for most people. Thirdly, loan-to-income multiples have expanded from 4 times income, 4.5 to now 6 times income, depending on lenders. 4, wealth transfers have hit record levels. Parents and grandparents gave £9.6 billion in 2024 alone as deposits. 5th, wages are still flat in real terms, adjusted for inflation, we're back to 2010 levels. 6, rental inflation outpaced wage inflation for 36 consecutive months. 7, house price to income ratios remain near historic highs. So ask yourself, does this look like a healthy, functioning market, or a system being artificially held up? So who's right? Let's summarise. The Canaries said, Will's right, the system functions like a pyramid. Mortgage introducer says Will's data is right, but calling it a Ponzi scheme is too strong. Here's my view. Both are right and both are wrong. The Canary is right about the structure, but they take the language too literally. Mortgage introducer is right that it's not illegal or fraudulent, but they ignore the deeper systemic mechanics. The truth sits exactly in the middle, which is very, I guess I'm trying to play both sides a bit there, but housing isn't a Ponzi scheme, but it behaves like one when credit expansion drives prices instead of income. And this is the part nobody, not the media, not the industry, is talking about. The system only stays upright if we continuously expand debt faster than wages. That's not sustainable. And I think I'm being quite diplomatic towards both publications here. So let's talk about the real question. What happens next? Forget what we call this, Ponzi, whatever the name, doesn't matter. The dynamics do. Here's the question we should all be asking ourselves. What happens when younger buyers can't borrow anymore? What happens when wealth transfers slow down? What happens when interest rates don't return to 1%? What happens when debt ratios max out and productivity doesn't increase? What happens when supply drops and demand is credit limited? This is why affordability is now the #1 political issue in the country, and it's why the media is suddenly picking up this debate. The system is under strain. We can all see and feel it. So in conclusion, is the UK housing market a Ponzi scheme? Not legally, not technically, but functionally, it has become a system that requires bigger and bigger financial sacrifices from each new generation to keep it afloat. And unless something changes structurally, not cosmetically, that upward flow of wealth will keep accelerating. Let me know what you think to all of this in the comments. I read all your comments. I learn a lot from them. Was the media fair? Did they miss something? And would you like a full video breaking down how I think the system could finally reset? Comment if you want that. I'm not going to make it for no reason. Thanks for watching, and if you found this useful, share it with people you care about. Like it, subscribe, and I'll see you in the next video up here.